Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Wednesday evening. I almost said Thursday. Wednesday, May 12th, 2021 at 7:15 p.m. Central Time. So we had a market today that you had a major report in what? You had a major report in CPI, and the index of inflation came out hot. If you break it down, the two components that were hot were used cars and taking a look at car rentals. Those were it. Transitory, by all means. Why? Because we know that the used cars are on fire because you can't get the semiconductors to make the new cars that the plants want worldwide. Once that is resolved, people will want those new cars. I would call that transitory. So that fits in with the Fed definition. Now keep in mind that the Fed has two mandates: full employment and controlling inflation, but they want inflation to pick up to 2%. So this number today got cheers from the Fed. Even though it's transitory in their mind, it'll be cheered. We still have the employment scenario that missed. It was supposed to be 1 million jobs last report, came out at 266,000. That wasn't very good. So half full glass, that's the way that I would approach the market. Do you go through in the futures markets major reports? I prefer that you don't. That doesn't mean you don't, but I prefer that you don't unless you have a good lead on the market and a stop, or you've taken some money against your position. Otherwise, you're playing with, let's gamble with it. It's a gamble anyways in futures, but you don't know what the report's going to say, nor do you know the reaction to the report. Think about the other day. We saw the jobs data terrible. And what did the market do? The market rallied in stocks. Today we see inflation is hot. The market was looking for hot inflation. And there's a big break in the stock market, all because everybody's trying to figure out what interest rates do off these numbers. For the first time in a while, we're approaching a 4% decline for the week. Okay, we're still not under the 18-week average. That's the target if the market keeps going down. When I look at the bar chart, I can visually see a higher high, lower low scenario. When I put on the swing line, it's exactly what you had. And X today, this is the market through yesterday, you weren't in a trend of any type. You had a higher high, lower low on the swing line. You can see what the market's done. The support in the market, you were already under it. You were under it before today's report. Right here, under the 18-day average, not trending. If the market just plays around here, we got to see where the Bollinger Bands are. We'll take a look right now for them. And lo and behold, the market hit the Bollinger Band yesterday, under it today, and it's already fighting to try to get up in the early evening back over it. But it's still not trending, and that is the key. When you look at momentum, you're oversold. So you got an oversold market that isn't in a trend, and it's under the Bollinger Band and only stays under that 5% of the time. When you come to the NASDAQ, you've been fighting a battle for direction at the 18-day average of closes, and it's a failure. So the NASDAQ has been hit, and why? Because these growth stocks that make up the NASDAQ rely on cheap money, and higher interest rates hurt companies like that. And that's where you're going. Okay, and that's what happened today, so you get hit again. Now, let's back up a little bit. Yesterday I said your first challenge of a 100-day average and a lower Bollinger Band often results in the market trying to find support there. Even as you look today, the market finished down 300 points. That's a heck of a break, by the way, as you can see, but not that far away at that point from the Bollinger Band, and it's fighting to get back over it. The problem now is over the market, this 100-day average should become a temporary resistance point, so be concerned about that. In the Dow, you went in 72 hours from high to this low, slash through here, staying back in the Bollinger Bands. This had been the strongest of the markets, and I want to get you right here. You're still embedded, and this is on Monday. I want to take you to yesterday. Is there any reason to be long this market now that you've lost the embedded reading? None. None. You're overbought. Target was the 18-day average. You already hit it. And today is just the gravy, today's just the gravy on that. So this was also important because if you took and you take, and I want you to take that Enhanced Bollinger Band course, it teaches you this, and it teaches you what happens when this occurs. Right there, the story, 13 chapters. You can knock it off in one afternoon. You're going to go, whoa, let me open my stock charts, let me open up my ETFs, let me open up this, let me find these patterns again. And you're going to go, darn it, look at that. In the Russell, take a look at what the market did. The market's been poor. It's had a higher high, lower low. That's my point. There's been nothing to do in this market. We found some initial support here. Today the market gave ground, and we'll see if it can get back over the Bollinger Band. Very similar to the others. First resistance now is going to be the 100-day average and then the 18. But we don't have trends. And that's the important thing. You've stepped out of the trends, but you stepped out before today. Today was just the crazy day. VIX cash, whoa, I wonder how many pros are out there right now writing calls to get back under the Bollinger Band and back to that 100-day average. Why the 100? It's the closest moving average. We'll see what it does. In the bond market, you stepped out and under the lower Bollinger Band. You're oversold. You have not been trending. You have a higher high, lower low. This is Tuesday. This is today. There's been no pattern to trade as I see it. In the 10-year note, higher high, lower low. No pattern to trade. None whatsoever. Dollar index, you got down 3 days ago. First challenge of the Bollinger Band oversold. Take the course. This was, I will tell you, this is 100% what I say, cover all shorts. Why? Take the course. Doesn't mean I'm going to be right. This does not mean this works every time. I don't know anything that works every time, but I got to pay my tax and die. After that, I don't know everything else. I got to listen to my wife. That I definitely do. Otherwise, I got a problem. Higher high, lower low, getting a bounce back into that. I don't see a turn. I know everybody's telling you, oh, the dollar's going to turn, it's going to run away. Okay. I expect it to have trouble right here between the 18 and the 100-day average. Throw the name of the chart away. I know you're not capable of that. Throw it away. What is the pattern doing? Do I want to be long with that or short? That's all I care about. I don't care that it's a dollar. I do care before a major report. I want to know the market. I don't want to be in the way of major reports in futures. You can't really do that very easily in investments in stocks. I get that. I fully appreciate it. But this vehicle's built with 90% leverage. Stocks aren't. Most people are paying cash for them, and the other half, they're 50% leverage. This is the baby you got to be careful of. In the euro, you have a lower low, higher high, went right up to the upper Bollinger Band, overbought. So long. British pound, 2 days over the upper band, bang, right back in it. That's my point, okay? Remember what I've taught you. Over these bands is the casino play. They want you to be buying there. Why? 95% of the time you're going to pull back within the band. So as they're selling it to you, they're looking for a number to cover under the band. Who's they? The magic they. But you go back on the chart and you tell me how well you did. I agree, this play, you got the casino. Everybody gets the casino every now and then. 98% of the time, the casino gets your money. 98% of the time. Therefore, if that's the case, take my money, because the big winner, the guy that scores on that trade, he's telling everybody about that. And then the suckers come back in, and that's what it is. You go to Vegas to lose. I go to this market to do what? I'd like to make money. In Bitcoin, what did you fall down to? The support level. This is where the pros, I think, are getting out of any shorts they might have had. Shorts? Yeah, why not? Take a look. Lower highs, lower low. This is today. And now tonight, look where you're at. This is tonight. This is what I think is going on. I think they're covering right through there. The difference between Brent and WTI. You're back under that 18-day average. So the bias is now in favor of the WTI a little bit. Okay. I fixed the spelling, by the way, on the Brent crude oil. I had one of my subscribers tell me about that. I appreciate it so much. I didn't see it. But to make a long story short, higher high, lower low, overbought, you trade it. I don't see anything to do with a market like that. Same with WTI. Overbought, no trend at work. There's nothing to do there. Gasoline, overbought. I'm bullish. I'm the rip-roaring bull of bulls. I'm also disturbed. Gasoline really didn't run very far in the futures during this 5 days of a period where 70% of the gasoline in the panhandle of Florida are out of fuel, 60% in Atlanta, they're saying, and you're not really running here. Markets aren't stupid. They're figuring that out. So you put it together, you try to come up with a game plan, and that is where it's at. I'll give you a piece of advice for tomorrow. In the financial markets, you take your hands, you enjoy looking at it, grab a sandwich, but keep your hands in your pocket. Let the market digest what's just happened. It's got to go around the world. We got the report this morning. Asia, people are sleeping when that report came out. Europe, the market saw it. They're going to react tonight and tomorrow, trying to figure out what do they do. We saw the Bund come up to a negative 12. That's pretty good, though. The market had been negative, what, 0.4, 0.25s, and it's been coming back alive. Okay, I like all that, but let these markets do it. Spend your time wisely. Take that enhanced Bollinger Band course. Learn a few things. These things show up over and over. You ever take books on other things to get the edge on a market? The word is the edge. Nothing guarantees a winner. It's all about getting edges. Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.